To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Hello dear students, hope you all are doing well. Today we are going to be discussing the revision test paper for corporate and other laws for CA Inter for your May 23 examination. Okay, now in your RTP, the first part of the RTP contains the amendments. We have already discussed the amendments. They are on the YouTube channel and you can check out the link in the description box below. Okay. Apart from that, in your RTP, there are question and answers given. The first part is the multiple choice questions. There are 10 multiple choice questions given, in which the first one is a case study. Apart from that, there are 10 descriptive questions also given. So first we are going to be solving the descriptive questions. After that, we will solve the multiple choice questions, including the case study. Okay, are you ready? Let's start. So let's start off with the first descriptive question, which is question number 11. Hansprat Limited, it is an unlisted public company having 5 directors and 2 independent directors. Now, Sangpul Private Limited, it's a subsidiary company of Hansprat Limited. It is actively carrying on business. It has paid up share capital of 1.5 crores, 40 members and turnover is 18 crores. The said company is not a startup company. Now, in context of the aforesaid case scenario, please answer the following question. Whether Sangpul Private Limited is mandatorily required to prepare a cash flow statement for its financial year as part of financial statement. Provide your answer analyzing Sangpul Private Limited in the following categories: 1-person company, small company, dormant company or private company. So what you have to do is you have to basically check whether this Sangpul Private Limited is required to prepare cash flow statement in its financial statement or not. Okay, now financial statement, if you remember the definition, here this question is coming from your chapter 1 preliminary. You should know the definition of financial statement and accordingly you should also know the definition of 1-person company, small company, dormant company and private company. This Sangpul Private Limited is actively carrying on business. It has 40 members. It is not a startup company. It is a subsidiary company of Hansprat Limited. Remember these details? Now, if we discuss the definition of financial statement, it is given in section 2 clause 10 of the Companies Act. It says that financial statement means balance sheet. It includes balance sheet, profit and loss account, cash flow statement, statement of change in equity and explanatory statements. Right? Every company has to prepare all of these. But there is an exception. In case a company is a 1-person company or a small company or a dormant company or a private company, which is a startup company, then they are not required to prepare cash flow statement. So that is an exception. Cash flow statement is not required in case of 1-person company, small company, dormant company and private company. Now this Sangpul Private Limited, is this following in any of these 4 criteria? We will have to check. So is it a 1-person company? See, in the question it is given that this company has 40 members. So a company with 40 members can't be a 1-person company. Okay. Is it a small company? See, the definition of small company says that it is a company other than a public company which has paid up share capital up to 4 crore rupees and turnover up to 40 crore rupees. This company should not be a subsidiary company, not a holding company, not a Section 8 company and not a company which is created under any statutory enactment. Now this Sangpul Limited, this is actually a subsidiary of Hansprat Limited. A subsidiary company cannot be a small company. So this is also not a small company. Is it a dormant company? See, dormant company is basically a sleeping company, a company which is not active. However, in the question it is mentioned that it is actively carrying on business. So again, it is not a dormant company. Is it a private company which is a startup company? See, it is clearly mentioned in the question that it is not a startup company. So it does not fall in this criteria also. So Sangpul Private Limited does not fall in any of these criteria. Moreover, even though it is stated that it is Sangpul Private Limited, but because it is a subsidiary of a public company, Hansprat Limited, therefore it is going to be deemed public company. Okay, so accordingly it is not falling in any of these 4 criteria. So accordingly we can say that this Sangpul Private Limited will have to prepare all of these statements: balance sheet, P&L account, cash flow statement, statement of change in equity and explanatory notes. It is not covered in the exception of cash flow statements. Moving on to the next question. The next question is Aman, who is an engineer, he started a new company with the name Nuts and Bolts Private Limited. He got registered a company in the same name. However, Nuts and Bolt is a registered trademark. After 5 years, when the owner of the trademark came to know about the same, they filed an application with the relevant authority. Can the company be compelled to change its name by the owner of the trademark? Can the owner of the registered trademark request the company and the company change its name on discretion? So here this question is coming from your chapter 2 incorporation. Relevant section is section number 16, which talks about rectification of the name. So if two companies have been created with very similar name, resembling name or identical name, and the central government finds out about it, then the central government can order the company to change the name. 3 months will be allowed and ordinary resolution will have to be passed by the company. Alternatively, if suppose this name is a registered trademark, then the owner of the trademark can make an application to the central government within 3 years of this new company's creation. In 3 years, if an application is made to the central government, again the central government can ask the company to change its name within 3 months by passing ordinary resolution. Right? So here, what happens in this particular case, Aman has created a new company, Nuts and Bolts Private Limited, but this Nuts and Bolt is already a registered trademark. The owner of the trademark, they make an application to central government after 5 years. They ask the central government to tell this company to change its name. Can they do so? Well, as per section number 16, they cannot do so. They can only do it within 3 years, not after 5 years. So this owner of the trademark cannot compel or force this company to change its name because 5 years have elapsed. Right? The second part of the question asks, can the owner of the registered trademark request the company and then the company can change its name on discretion? So basically, this means that can this company which is having a registered trademark, can they request the company to change the name? Of course, why not? They can request the company to change the name. In this case, the company can change the name if they want to under section number 13 by passing a special resolution and taking the approval of the central government. That is the usual procedure if the company wants to change the name. They will have to take the permission of central government and they will have to pass the special resolution under section number 13. Moving on to the next question, Yellow Limited received a communication from the central government for preparing periodic financial results and complete audit or limited review of such periodic financial results. The board of directors have raised an objection on the grounds that as it is an unlisted company, periodic financial results need not be prepared. Examine with reference to the Companies Act. Now, if you have studied the amendments, not just the amendments of May 23 exam, but also the previous amendments, then you will know that this is coming from amendments. It is a chapter 9 amendment. A new section was introduced, which is section number 129A, which says that even if it's an unlisted company, if the central government want, then they can ask such a company to or such class of companies to prepare periodic financial results, get them audited and submit it to the central government on periodic basis. So here you simply have to flaunt your knowledge of section number 129A and you will have to quote this section 129A. So let's read this. Section 129A of the Companies Act, periodic financial results. The central government may require such class or classes of unlisted companies as may be prescribed to prepare financial results of the company on periodic basis and in prescribed form, to obtain the approval of the board of directors and complete the audit or limited review of such periodic financial results in prescribed manner, and file a copy with the registrar within a period of 30 days of completion of the relevant period with such fees as may be prescribed. Therefore, the objection of the board of directors is that this company is an unlisted company. It does not need to file periodic financial results. This contention is not correct. Okay. Moving on to the next question. Upkar Nidhi Limited was about to hold an annual general meeting on the 25th of August of 2022, for which the notice of the AGM along with relevant documents as prescribed are sent to all its members, including the following: a member individually holding shares of the face value of 800 rupees, which amounted to 0.16 of the total paid up share capital. 2 members jointly holding shares face value 1600, holding amounting to 0.32 of the total paid up share capital. In case you are curious, if you do the reverse calculation, this is going to come to 5 lakh rupees, which is the paid up share capital of the company. 42 members individually holding shares, face value is 600 rupees, and their shareholding is amounting to 0.12 of the total paid up share capital. All the remaining shareholders individually holding 1.2% of the total paid up share capital or more than that. Right now, in the AGM, which is held on the 25th of August of 2022, the members are not provided the facility of e-voting. Okay. In the context of the aforesaid case study, please answer whether Upkar Nidhi Limited was required to send a notice of AGM along with relevant documents to all the members as aforesaid. Okay. So here we are talking about Nidhi company. This Nidhi company, whether it is supposed to send the relevant documents and the notice of the AGM to all of these members, we have to discuss that. Okay, so here the relevant section is section number 136. This question is coming from chapter number 9, accounts of the company. Section 136 talks about sending the annual report of the company at least 21 days prior from the annual general meeting along with the notice. So whenever the company is holding an annual general meeting, at least 21 days prior, the company has to send the notice. Along with that, the annual report of the company has to be sent to the members, debenture holders and other stakeholders. Right, in case of section 8 company, this time period is 14 days. Right, now in case of Nidhi company, there is an exception. So section 136 subsection 1 of the Companies Act, in case of Nidhi company, subject to modification, in case of members who do not individually or jointly hold shares more than 1000 rupees in face value or 1% of the total paid up share capital, whichever is less, it shall be sufficient compliance of the provisions of this section if the intimation is sent by public notice in the newspaper circulated in the district in which the registered office of the company is situated, stating the date, time, place of the AGM, and the financial statement with its enclosure can be inspected at the registered office of the company, and the financial statement with enclosures are affixed in the notice board of the company. Okay, so in case of a Nidhi company, if a member is holding shares wherein the face value is less than 1000 rupees or it is less than 1% of the paid up share capital of the company, in such a situation, notice is not required to be sent to such a member. In such case, simply public notice in the newspaper is sufficient in the district where the registered office of the company is situated. In this public notice, the company will have to state the date, the time, the venue of the annual general meeting. They will have to state the registered office address. If any of these members, they want to inspect the financial statements and the annual report of the company, they can go to the registered office and they can inspect, right? So in our particular example, so in case of Upkar Nidhi Limited, the notice has to be sent and the relevant documents have to be sent only to those people who are individually or jointly holding shares more than 1000 rupees of face value or more than 1% of the paid up share capital, whichever is less. Right, so in the given example, let's see the question, which of the following members need to be sent notice to. So in the first case, member is individually holding shares, it is of 800 rupees only, face value is less than 1000, notice is not required. In second case, the face value is 1600, so here it is more than 1000, so therefore notice is required. In the next case, there are 42 members individually holding shares of face value 600. Again, notice is not required. In the next case, individually they are holding more than 1.2% of the total paid up share capital. It is more than 1%. Therefore, here notice is required. Next question is from your chapter number 5 relating to deposits. Answer the following citing relevant provision of the Companies Act. Wire Electrical Limited, having paid up share capital of 1 crore rupees, availed a term loan of 10 lakh rupees from ABC Bank Limited to purchase electrical items. Mr. Tar, one of the directors of the company, is of the opinion that it shall be considered as deposit. Is he correct or not? Now, in our chapter number 5 relating to acceptance of deposits, we have discussed acceptance of deposits rules 2014, in which rule number 2 talks about what should not be considered as deposit. In that, we know that if any loan facility is provided by a banking company, it will not be considered as deposit. So, this is a very, very simple question. This 10 lakh rupees of loan which is received by the company from ABC Bank Limited shall not be considered as deposits. Okay. Next, a government company which is eligible to accept deposits under section 76. 76 is about public deposits. So this government company can accept deposits from the public. Cannot accept deposits from the public exceeding 25% of the aggregate of paid up share capital, free reserves and security premium account. Is it correct or not? So here we had discussed again acceptance of deposits. We had discussed rule number 3, which talks about the limits up to which a normal company which is eligible under section number 73 can accept deposits from members or from public. Okay, an eligible company under section 76, how much deposits can this company accept from members or from public? And same way, government company can also accept certain prescribed limit of deposits from the members and the public. So this rule number 3 states that government company can accept up to 35% of the paid up share capital, free reserves and security premium account as deposits from the members, or in aggregate we can say, right? So accordingly this limit of 25% is not correct. Okay, moving on. Red Limited, the company, it was incorporated on the 1st April 2020. The balances extracted from the audited financial statements are given below. The net profit before tax is given and net profit after tax is given. 2021, 21, 22. Okay, 5 crore, 3.75, 7 crore, 5.25 crores. The company proposes to allocate the minimum required amount for CSR activities during the financial year 22-23 if it is mandatory. You are requested to advise the company in this regard and compute the minimum amount allocated as per the Companies Act. Okay, so here we are talking about CSR, section 135. First, you have to check whether this company has to do CSR or not. And secondly, we will have to check what is the minimum amount that the company will have to spare if they have to do CSR. So now section number 135, it says that for any company, if in the preceding financial year, the net worth is 500 crore rupees or more, or the turnover is 1000 crore rupees or more, or the net profit is 5 crore rupees or more in the preceding financial year, then CSR is compulsory for such a company. In such a case, 2% of the average net profits of the preceding 3 years will have to be taken by the company. Now, this 2% amount will be spent by the company on CSR. But in case the company has not completed the period of 3 financial years, then as many years as this company has completed, we'll take the average of those net profits and calculate 2%. That amount will be used for CSR. Okay. Now, here when we say net profit, the net profit has to be calculated as per section number 198. Now, the section number 198 is not in our course, but we have discussed that this net profit will not include income tax. Okay, it is mentioned in section number 198 that income tax should not be part of this net profit when we are calculating this net profit. Okay, so accordingly, we will have to take the profit before tax. So in order to check whether the company has to follow CSR or not, here only net profit is available. So we are going to check the preceding financial year's net profit. And we will check the net profit before tax because income tax should not be deducted. Alright, in order to check the net profit. Okay, so we will have to check the preceding financial year's net profit, which is year 21-22. The net profit is 7 crore rupees. According to section 135, this net profit should be more than equal to 5 crore rupees in the preceding financial year. Then the company will have to constitute a CSR committee. They will have to comply with CSR requirements. So here the 7 crore is obviously more than 5 crores. So this company has to do CSR, right? Now CSR, the amount that has to be spent by the company, it is 2% of the average net profits of the preceding 3 financial years. Here 3 years are not available, only 2 years are available. So we'll calculate the average of these two, 5 and 7. The average is going to come to 6 crore rupees. So we'll have to take the 2% of 6 crore rupees. That is going to be the amount that the company has to spend on CSR. Accordingly, the minimum contribution to CSR has to be 12 lakh rupees by this company. So these were all the questions relating to the Companies Act. Now, let's move on to the Indian Contract Act. Okay, question number 17. Let's read this. Mr. Sahil purchased a furniture worth rupees 1 lakh from Mr. Puran on credit. Mr. Raman entered in contract with Mr. Puran for the guarantee of the payment by Mr. Salil. Okay, so what happens? There is a party, Mr. Salil, then there is a party, Mr. Puran. Mr. Puran has sold furniture to Mr. Salil for rupees 1 lakh, but this amount is not yet paid, it's on credit. So in a way, we can say that Mr. P has given a loan to Mr. Salil of 1 lakh rupees. Okay, now here there's another party, Mr. Raman. Mr. Raman is the surety in this case. Okay, so in case Mr. Salil does not make the payment, then Mr. R is going to make the payment to Mr. P. P is Puran, right? So here, Mr. Salil becomes the debtor, Mr. Puran becomes the creditor, and R, that is Raman, is your surety. Okay, let's keep reading. Mr. Puran filed the suit against Mr. Raman for payment. So Mr. Salil could not make the payment due to some financial crisis. So here Mr. S fails. Okay, so Mr. Puran has filed a suit against Mr. Raman for payment. Meanwhile, the father of Mr. Salil paid 20,000 rupees to Mr. Puran on behalf of his son. Mr. Raman, in ignorance of the above payment, paid 1 lakh rupees to Mr. Puran as surety. Afterwards, when Mr. Raman knew the facts, he asked Mr. Puran for the refund of 20,000 rupees. Mr. Puran denied for the refund with the words that only Mr. Salil who can claim the amount of 20,000 rupees, explained with reference to the Indian Contract Act, whether Mr. Raman can claim the amount of 20,000 rupees. So what happens here is that Mr. Salil fails to make the payment. Okay, so Mr. Puran, he files a case against Mr. Raman to make the payment, right? Now what happens? Mr. Salil's father, he gets to know about it. So his father pays to Mr. Puran 20,000 rupees, right? Okay, now Mr. R, Mr. Raman is unaware of this fact. So later on, Mr. R also pays 1 lakh rupees entirely to Mr. Puran. So Mr. Puran has received 20,000 rupees from the father plus 1 lakh rupees from the surety, Mr. Raman. Okay, later on, Mr. Raman finds out that already 20,000 rupees was paid to Mr. Puran. So he asked Mr. Puran to refund 20,000 rupees. Mr. Puran says, no, I am not going to give. So you have to explain whether the surety can claim 20,000 rupees back or not. So this is a very, very simple question. As per section 128 of the Indian Contract Act, we know that the liability of the surety is coextensive with that of the principal debtor. So whatever is the liability of the debtor is going to be the liability of the surety. So initially, if the debtor's liability is 1 lakh rupees and 20,000 has been already paid, the remaining liability of the debtor is going to be 80,000 rupees. Accordingly, the surety is also supposed to pay only 80,000 rupees. Accordingly, if the surety has paid 1 lakh rupees, he can claim the refund of 20,000 rupees from the creditor, which is Mr. Puran. Alright, so that is the answer of this question. The next question is from the Negotiable Instrument Act, and this is also a very, very simple question. Let's read this. So, a bill of exchange is drawn payable to Mr. Amir or order. Okay. So, there's a person, Mr. Amir, right? Mr. Amir endorses it to Rani. Okay. Then Rani further endorses it to Kajol. Okay. Kajol endorses it to Shahrukh. Okay. And Shahrukh endorses it to Madhuri. Okay. Now, Madhuri further again endorses it to Mr. Amir. So, what Madhuri does? Madhuri sends this instrument or endorses it in favor of Amir. So, this instrument has circulated back to the person initially who was supposed to receive the payment. Okay, so this instrument has completely circulated back or negotiated back to its original pay. Okay, let's read this question further. State with reasons under the provisions of the Negotiable Instrument Act whether Mr. Amir can recover the amount of the bill from Mr. Rani, Kajol, Shahrukh and Madhuri if he has originally endorsed the bill to Rani by adding son's recourse. So that is the twist here. So what Mr. Amir has done, when Mr. Amir was giving this instrument to Rani here, on the instrument he wrote son's recourse. So this is a son's recourse endorsement. Now you have to explain whether Mr. Amir can claim the money now from Rani, K, S and M. Can he do so? So you should know what son's recourse endorsement is. Son's recourse endorsement means that without recourse to me. That means no matter what happens, don't come back to me. My due is finished. If later on the instrument comes back to me, I can sue you, but nobody can sue me. Okay, that is what son's recourse means. Okay, so generally speaking, whenever the instrument comes back to the original owner or the original payee, then all the intermediary parties are discharged. If this was not son's recourse endorsement, then R, K, S and M were discharged. They could not be held liable because the instrument has come back to Mr. Amir. But because here he has written son's recourse, therefore he can file a case against Rani, Kajol, Shahrukh and Madhuri. He is not liable to any of these parties. Make sense? Next question is from the General Clause Act. M owned a land with 50 tamarind trees. He sold his land and the timber obtained after cutting the 50 trees to Mr. N. Now M wants to know whether the sale of timber tantamounts to sale of immovable property as per the General Clause Act. So here simply you should know the definition of immovable property. There is a land. On the land there are trees. These trees are cut off and then sold. Whether these cut off trees will be considered as immovable property or not as per the General Clause Act. So General Clause Act says as per section 3 clause 26 that immovable property shall include land, any benefits that arise out of land, things attached to the earth or permanently fastened to anything attached to the earth. Now, if trees are attached to the earth, then they will be considered as immovable property. But if they are cut off, then they are no longer attached to the earth. They are no longer benefits arising from the earth and therefore they will not be considered as immovable property. So, timber cannot be immovable property because they are not attached to the earth. The last descriptive question is from interpretation of statutes. When can the preamble be used for interpretation of statutes? What is a preamble? So whenever there is an act, in the beginning of the act, this preamble is always there. This preamble basically states the objects or the purpose of the enactment. Alright, so this preamble is used to know the aims and object of the legislation. It cannot be used to understand legislation. If there is a conflict between the law or legislation stated in the act versus the preamble, always the weight has to be given to the legislation or the law. Okay, we cannot give more weight to the preamble. However, preamble can be used only in certain situations. If suppose there is ambiguity in the words of the enactment, then assistance can be taken. So if the words written in the act, they are ambiguous, confusing, we do not understand the meaning, we can understand the meaning of them by referring to the preamble. Okay. Second option is if we want to know the scope of application of the law. Okay, if in the enactment there are certain words which are mentioned and we don't exactly know what all can be covered in it, we want to know the scope of the enactment, then for that we can refer to the preamble. The preamble is going to give us the aims and the objects. Accordingly, we can understand the scope or the limitation of the act.